Good morning, it's Monday the 15th of November and welcome to Atlantic Capital Markets roundup of the coming week's economic highlights to keep an eye out for. As always, we'll start with a quick summary of the key macro data points coming up this week in the world's markets, and we'll then take a look in more detail at some of the bigger stories straight afterwards. So, stay tuned. So, let's take a look at the economic numbers being issued this week. So, we start on Tuesday when the Australian Central Bank released their monthly meeting minutes. Here in the UK, the latest unemployment figures are also released on Tuesday, and we'll discuss the potential impact of these in more detail shortly. Likewise, the latest US retail sales are released, figures that will be interesting in the context of falling consumer confidence in the US. We'll also take a look at this in more detail in a moment. Tuesday also sees the latest IEA oil market report and the second Q3 estimate of the Eurozone's GDP figures, and the latest US industrial production figures. Many eyes are on the current state of inflation, so on Wednesday the release of the latest UK CPI figures will be watched closely. More about that in a moment. Wednesday also brings the latest CPI figures in the Eurozone and Canada's latest inflation figures. Finally on Wednesday, the latest EIA crude oil stockpiles. On Thursday, the US jobless claims and Japan's turn to release their latest inflation figures. And finally on Friday, with the run-up towards Christmas looming, we hear the latest retail sales figures here in the UK, which again we'll discuss shortly. And the companies that we'll hear updates from this week are as follows. On Tuesday, the mobile telecoms group Vodafone releases its half-year results, something we'll take a look at in more detail in a moment. We'll also hear from Premier Foods, Imperial Brands, and the property company Land Securities. Over in the US, it's the turn of Home Depot and HomeServe. And the retailing giant Walmart releases its third quarter earnings results, which we'll discuss in detail shortly. On Wednesday, British Land and the semiconductor company NVIDIA also releases their Q3 results over in the US, and we'll talk more about that in a moment. We'll also be discussing Royal Mail in a moment, who released their first half results on Thursday, and also on Thursday the turn of National Grid and Macy's. And finally on Friday, Kingfisher, and in the US, Foot Locker. Inflation was very much in focus last week after US CPI came in at 6.2%, well ahead of forecasts. With several inflation prints due again this week from the UK and the Eurozone, rising consumer prices are likely to stay in focus. In addition to inflation, earnings season continues apace with plenty of updates due. And finally, we'll look at some of this week's key stories in detail. Tuesday sees the release of the latest UK unemployment figures. In the November Bank of England meeting, the central bank said one of the reasons for not raising interest rates was to see the impact of the end of the furlough scheme on the labour market. Well, has the labour market been able to absorb the additional workers released? The Bank of England didn't raise interest rates despite inflation expecting to reach 5% by the end of the year. Inflation will be in focus with the release of this employment data. A strong rise in wages could add to existing inflationary pressures. The unemployment rate fell to 4.5% in the 3 months to August. The claimant count also declined to 5.2% in September. Given that there are still over 1 million job vacancies in the UK, the unemployment and claimant count could still fall further, although this is likely to be offset by the release of employees from that furlough scheme. Unemployment is expected to remain steady at 4.5%. So do keep an eye on the GB pound and of course the FTSE. US retail sales have picked up slightly in recent months with a 0.7% increase last month, defying expectations of a 0.2% decline. August's number was also upwardly revised. Interestingly, retail sales rose even as consumer sentiment was falling, hitting its lowest level in a decade heading into November amid surging prices. Often, when consumer confidence declines, so do retail sales. However, this hasn't been the case so far. Retail sales are expected to rise 1.1% in October, despite the latest University of Michigan sentiment data revealing that consumer morale was at the lowest level in over 10 years. So keep an eye on the US dollar and US indices. Vodafone reported better than expected Q1 revenues of €11.1 billion back in July and confirmed that it is on track to meet full-year guidance of underlying profit after leases of €15 billion to €15.4 billion and free cash flow of €5.2 billion. Roaming revenue was hit hard by the COVID restrictions as travelling collapsed. There is likely to be some improvement here, but it's likely to still be a long way from 2019 levels. The share price has been steadily declining, hitting a 12-month low earlier this month. Germany is a key market for Vodafone. However, economic growth has been downgraded for the year there. The economic slowdown in Germany could impact H1 results. Total H1 revenue is expected to be €22.1 billion. And finally, on Tuesday, Walmart releases their third quarter earnings results. Now, Walmart benefited across the lockdown as the essential retailer was allowed to keep its doors open, whilst many other businesses were forced to close. Economies have reopened. However, supply chain disruptions mean that costs are rising. Has Walmart been able to use its sheer size to keep costs lower? Sales momentum has remained strong even as other shops reopen and consumers have more choice. In the last quarter, Walmart reported revenues of $141 billion, a 2.4% increase from the same quarter a year earlier. Sales momentum is expected to continue with growth of 6 to 7% in Q3, comparable store sales. Expectations are for revenues of $135.5 billion with earnings per share of $1.39, and this would be a 3.7% increase compared to a year earlier. The share price gains have been lackluster, gaining just 3.9% across the year to date. Wednesday sees the release of the latest UK CPI figures. The UK inflation jumped to 3.2% in August from 2% the previous month. Inflation is expected to continue rising towards 5% by the end of the year, so a jump towards 4% in September is very likely. Rising energy prices, supply chain disruptions and labour shortages have all contributed to rising prices. And these factors aren't expected to start easing until at least next year. CPI is expected to be 3.9% and core CPI 3.7%. High inflation data will turn attention back to the Bank of England and the likelihood of the central bank raising interest rates next month in December. However, after the misguidance ahead of the last Bank of England meeting, the market could understandably be quite distrusting over what the BOE could do next. So do keep an eye on the pound and of course the FTSE. NVIDIA stock has rallied over 50% across the past 3 months, making it the 7th most valuable company in the US. The semiconductor company is due to report Q3 results and is expected to post a 52% increase in earnings per share to $1.11 and revenue to grow 44% to a record $6.8 billion. The firm has beaten revenue and earnings expectations every quarter for the last 5 years, which is a pretty impressive performance. The question is, can it continue? Unprecedented demand for both data center and client offerings, in addition to the launch of the suite of chips targeting the metaverse, NVIDIA could well see another beat. The stock is up 130% this off its all-time high. When we last heard from Royal Mail in mid-September, Royal Mail said that the number of parcels that it's handling is significantly higher. The share price has been trending lower despite Q1 results revealing that revenue was up 12.5% year-on-year compared to the same period a year earlier, and up 20.5% compared to the same period in 2019. Instead, investors have focused on some of the details behind the headline figure, such as a 13% drop in parcel volumes as shops reopen. Costs were also on the rise as wages and fuel costs increase as seen across the industry. Following the September update, the share price tanked 20%, but a rebound has been in place since early October. Expectations are for H1 adjusted operating profit of £395 million to £400 million, with H2 expected to show an improvement. And finally, on Friday, we hear the latest UK retail sales figures. Now, UK retail sales had been contracting almost each month since April's 9.2% surge, with just a very slight 0.2% tick higher in June. The trend over the summer months has been a rise in spending on services to the detriment of retail sales. Leisure businesses have seen a particularly strong few months. The petrol crisis in September did little to help retail sales, with many filling up the tanks or spending time in queues, meaning less discretionary spending elsewhere. Whilst retail sales are expected to fall in October by 1.9%, there is some possibility of an upside surprise if concerns over supply chains mean that people bring their Christmas shopping forward. So, to wrap up, let's take a look at the dividends for this week. In the FTSE 100, we'll hear from Bunzl, GlaxoSmithKline, Pershing Square Holdings, B&M European Value Retail and DCC. And in the FTSE 250, we'll hear from Worldwide Healthcare Trust, Genus, Volution Group, Bytes Technology, Witan Scottish American Investment Company. So that's what's to keep an eye out for this week. Don't forget to click on that subscribe button just to make sure you don't miss our regular market updates and of course our special market analysis videos as soon as they're released. And of course, if you're interested in the markets, don't forget to check out our app, which you can download from the App Store directly to your mobile phone, which gives you a whole host of useful functionalities as an investor. So until next time, from all of us